Hello everyone, I go with the buyers right here. This is my first trade. And you can see that the market is coming down like this, but this is a pattern that it can have a retracement. Previously we have this ABC to the upside, so this area is going to be somewhere that the buyers can enter. Okay, beside that we have this doji, and we are coming back to the doji. Okay, so dojis are strong candles in terms of having some trading setups. And if you can see, this doji is representative of a ranging market which has been broken. Okay, so when we have a strong range broken, when we're coming back to that, we can have retracement, just like breaking a doji. For example, here we broke this doji. Since we are at this base, we can have this trade. Okay, because break of dojis can give us retracement. Coming back to the dojis can also give us retracement. Of course, we don't trade only with this reason. We can also combine this with other reason. For example, red, green, red, green, red, green pattern, it can have retracement. Okay, so it's two reasons. Another reason, coming back to the doji. Okay, three reasons. Another reason, gap down in our favor. So we got four reasons here, but for sell we have minor downtrend, one reason, and then yeah, so for selling this is only one reason, but for taking it as a buy, it was four reasons. That's how this works, and that's what I'm trying to teach my students to, to trade with. Okay, now we can see that we have also this trend line, but it's not quite matching that, so I would just ignore that. That's how I trade, that's how my students should trade. Okay, ABC to the downside, break the previous swing. This area is at QM area, and then we have entry right here. Okay, so this is another setup that we didn't even take. We have a QM right here, just like that, but this one is a sell QM. Let's just check for the, okay, let's just mark this area and then check for the confirmation and see if we can have a trade on this one. All right, we don't see any engulf here, so we're probably not going to take any trade on this one because it doesn't have the confirmation. Boom. If you don't know what I'm talking about the confirmations, about the QMs, you can watch this video, and there's full detail of QM trading, and it's very effective. Okay, so we have this overlapping level, and you know that the overlapping levels are supply or demand areas, and after breaking that, it's just like breaking a doji. Okay, breaking an overlapping area is just like breaking a doji, so we can have a trade. But this time I will take this with 100 because I like, okay, it's kind of going crazy. I like to decrease my risk when it comes to some not sure trades. Okay, I will, oh my god, I'm kind of struggling. Okay, I will go with the buyers right here, because I'm not sure about going with the sellers, to be honest, because the QM doesn't have the confirmation at the higher time frame. And also, if you look at here, you can see that the QM already has been consumed in the lower time frame, so maybe that's why we don't have the confirmation for selling. I don't know, I just took the spot trade right here. Let's see if we're gonna win this or lose this. This is a high risk trade, that's why I go with 100. If it wasn't high risk, I would go with 250, but it seems that it would be better if we were taking this as a sell. Okay, all right, no problem. Let's see, we'll make this up easy. Okay, for selling this, we have a break of supply area right here. So we could have this QM, but the QM didn't have the confirmation. So let me see. Okay, we don't have anything here for another reason. Okay, anyways, let's see if we can take more trades. All right, here we have a doji, but this doji is not in a ranging market, it's just a strong trend to the downside. Okay, so if we want to take a buy trade, it's going to be risky here. And this area is a very high scale QM. It's not accurate at all. The bigger your QM's scale is, becomes inaccurate. It's more inaccurate. Okay, because this QM is a very big QM, and the zone is going to be a lot bigger. So, but in general, this is a buying area for us. Let's see. This is the common point of rejection, but this is the minor trend. Let's see. Let's see if I can take a buy right here. Go with the buyers right here, but this time with 250. Let's see. This is a common point of rejection. In general, this is a buying area, but this is minor and major downtrend, so it's against the trend. Let's see. And okay, that was a winning trade. And the reason behind this trade was, since we are at the buying area, even though we don't have a confirmation for this QM because it's just too big. But in general, this is I did consider this as a buying area, and this as a common rejection point. 1, 2, 3. This is the 4th time. Okay, I entered below that with marginal safety. So these are the 2 reasons for taking this trade: common point of rejection and QM buy, set up on the QM buy. Okay, for the sell, okay, for taking this as a sell, we have major and minor downtrend, 2 reasons, and then yeah, that's it. 2 reasons for the sell, 2 reasons for the buy. That's why it was kind of risky and 50-50. All right, now we're trying to create this double bottom right here. So I will take a very small trade here with the buyers. Okay, and the reason behind this, because it's showing me that it's trying to create this double bottom, and you might ask, oh, why? Because you see that we have a low here, but next time we don't have lower low. Okay, it came back from here, so it's showing me that this right here. So the philosophy behind double bottom is that the sellers push the price down one time, it can be a strong trend, and then we have buyers activity here, and then again we have sellers. Okay, if the sellers didn't create a lower low, or the sellers were pretty weak at this leg, it means that the buyers are taking power. Okay, so we have strong sellers here, and then we have buyers activity, and then we have weak sellers here. So that's showing me that the buyers trying to turn the market, and this is creating a double bottom. This is a reversal pattern. All right, just like that, and we call this last effort of sellers. Let's see. For now, I don't have a confirmation for going with the buyers, and we are at the space. Okay, so there's 2 scenarios: creating this double bottom, we took advantage of the trade. Okay, and we could go up, or we're going to create a base and then we break, pull back, and go up. Okay, let's see what the market is trying to do. And also we have this common point of rejection, which I doubt the market's going to come down. This is going to be the entry. It's also lined up this single rejection, so this area would be very nice area for taking a common point of rejection trade, but the market will not come down. All right, so they managed to go up again. Okay, I go with the sellers right here. This is a risky trade, but I did take this with 50, so no problem. I go with sellers because I see that the market is trying to move like this. This is a mutual buyer's candle. And let me just see. There's a common... Okay, let's go higher a little bit. Oh my god, my entry is so bad. There's also a common point of rejection for this trade. I have to check this after this candle close. One more time for you guys. Okay, both of them were winning trades. And now if I draw the common point of rejection for you as a setup. Okay, we have one common point of rejection here, which nobody touched. And another one is somewhere here, okay, which makes this trade takeable and this trade takeable. Okay, so in terms of common point of rejection, both of these are correct, but it comes to your risk appetite. If you don't willing to over risk, you know, 1, 2, 3, this is the fourth time it's touching. But about this one, 1, 2, 3, 4, 5, 6, this would be 7th time touching. All right, that's why it depends on you. You could take both of them. All right, that's it for today's video, guys. Peace out.